All right, everybody, welcome back to another edition of Market Talks with Dr. Stoxx. It is October 24th, 2024, and we're just a few days ahead of the election. General election happens every 4 years in this country, and so markets are kind of wrestling with that and also wrestling with an out-of-control hike in yields, and we're also getting some good prints on some of the economic indicators. Job market is still pretty good. Earnings coming in so far have been pretty good. And so the market is still in bullish mode, expecting some good stuff to come toward the end of the year as well, quarter four. But we are right now in the third or fourth day, depending on which index you look at, of a very, very modest, fairly low volume pullback. So we need to ask the question, are we going to get more, or is that it? Is today the end? Does it bounce right back up tomorrow? All right. We'll look at those questions in just a minute. I want to get over to first the hourly chart. Not the hourly chart, the daily chart. Let's erase those. So here we have the S&P 500. And we've got all-time highs happened just late last week. And then here we are on a Thursday. So there's your Monday print. Monday was a little bit lower. Tuesday closed the gap to close pretty close to even. Yesterday was the big day of selling. So the market went fairly far down, over 1%, tagged the midline of the LRC, the very top of the 34 EMA bands, bounced back up into the close, but it was still a red bar on pretty good, I would say, distributive volume. Just as we got over on that big engulfing candle right there, also on heavy volume, and we go back a little bit further, we find a couple of other distribution days. So we've been seeing this pattern, the selling days, higher volume, the accumulation days, the days where the market closes green, not quite as high a volume. That does tell us that market is starting to price in some caution, probably on some of the earnings that have been coming in a little bit mixed, and possibly on what's going to happen in the election, and possibly on geopolitical pressure. We've also had yields rising, which means interest rates are going up. That puts a pinch or pressure on earnings, especially in growth names and small caps. Bonds have been falling, yields going up. That's not a real good sign for the market, for the economy. We've got gold nearly up at all-time highs. It's come back a little bit last couple of days. And we had some bad inflation reads last week. The Fed is probably not able to cut as much as the market wants it to over the next couple of meetings. So there are some headwinds, right, that the market's dealing with. And I think that's kind of what we're reflecting in here too. But here's the question I want to ask. How can I know? Well, know is not the right word. How can I make an educated guess as to what the next leg is over the next couple of days? We've got Friday to close out the week, and then we've got a whole new week coming up next week, and we've got some really important data coming out next week, including, I think, on Friday, the all-important jobs data to show us what the market did, what the labor market did in October. Friday is the very first day of November, so I'm not sure whether we'll get the job print then or the following week. Sometimes that happens too. Anyway, we'll worry about that later. So here's one thing you can note. So obviously there are easy ways to determine the overall trend of the market. You look at the LRC. Is it going up or down? This one's going up. You look at the market bias indicator. Is it red or green? Well, it's green, and it's rising. Also good. 34 EMA bands sit at high, low, and close. What are those guys doing? Well, they're also going up with very little variation there at all. So everything is trending higher. However, we've been in this little pullback. We've been making money on the pullback by applying some hedges, right? We're short the NASDAQ 100. We're short the S&P 500. We just profited. We put into the bank a short in the semiconductor index, and we've also got a small short on the FANGs in one of those FANG funds. And we may even need to add one more final short before we end trading today. But here's a clue. So I've said this before many times. There's a guy that I know. He passed away a few months ago, so he's no longer with us. But he developed a trading system called the STRAT, S-T-R-A-T. That's an acronym for I don't know what exactly. And I'm not totally up to speed on his system, but this is what I remember. I took one of his courses some years ago. And there are people on Twitter, by the way, if you just type in or search for STRAT, S-T-R-T, S-T-R-A-T, you'll find a whole bunch of traders that only trade this system. They're making money from it. I've done some kind of eyeballing of charts using the system. I don't think I'd be making much money from it, but hey, whatever works for you. So there are three types of candlesticks, right? And in fact, this system is probably best done using the line chart, not the line chart, the, there it is, the bar chart, way up there at the top. It's not, I don't know if you can even see that. It's so thin. Let me just see if I can. Colors, HLC, thin bars. No, we don't want, there we go. Okay. So all we're looking for in this system is where did the high print of the day go and where did the low print of the day go. We don't care about the open. We don't care about the close. We don't care about the body of the candlestick, whether it's red or green, etc. Just the high and the low. Three kinds of candlesticks. Number one is the inside day bar. The high is lower than yesterday's high and the low is higher than yesterday's low. That's an inside day bar. That's exactly what we've got today. Inside day bar is a condensation of trading activity, trading range. It signals indecision in the market. When it comes at the end of a downtrend, it can flag a reversal back to the upside. When it comes at the end of an uptrend, it can flag reversal to the downside. And I'll show you a couple of examples. Here's an inside day bar right there at the top of a pretty long, over a month, uptrend. And it was that inside day bar that was our first tip off to this little pullback coming here. We've got an inside day bar today. It is at the end of a 4-day potential pullback. I have to say this is a very weak, very modest little pullback. If this is the end of it, the market is really, really strong. I'm not so sure it's that strong, but this could mark a very near-term pivot point on the pullback. We get a bounce maybe back up to all-time highs, 585 for sure. And then we have to decide what the market's going to do after that. That's a potential. That's number one. Number two is the outside day bar. The high today is higher than yesterday's high. The low today is lower than yesterday's low. That's an outside day bar. And they function pretty much in the same way as the inside day bars function. Now, the one difference is that the outside day bar tends to be an expansion of trading range. So when you get an outside day bar in, let's say, the middle of a run, you're actually carving out a sequence of higher highs and lower lows. And then you tend to see, where's my finger? Where's the, I can't ever get my, there we go. We tend to get these, because everything's backwards. We tend to get, trading ranges from an outside day bar that pushes the highs higher and pushes the lows lower. So you got to be a little careful with those outside day bars. They can trigger some volatility in the market that wasn't there before. So that's number three. That's the third type of bar. One is the inside day bar. Three is the outside day bar. Two is the directional bar. You have a directional up and a directional down, but they're both called type 2. So a higher high yesterday than yesterday's high and a higher low than yesterday's low. That's the directional bar to the upside, and just the opposite is true for the directional bar to the downside. A lower low and a lower high relative to yesterday. So yesterday was clearly a type 2 to the downside, followed by a type 1 inside day bar. Here's one little tip. So if you continue to get directional bars in the same direction, right, two up, two up, two up, two up, you're in a good trading range, and your expectation for the next bar is again the same thing, still to the upside. To the downside, 2 down, 2 down, 2 down. Our expectation for the next bar is another 2 down, right? So when you're in a trending pattern like that, you're going to get a sequence of 2 ups or 2 downs. That's good, healthy trending action. We love to trade that kind of trending action. It makes trading a lot easier, a lot simpler, and it makes a technical analysis of the chart a lot easier. Things get difficult when we get into the tight consolidation or we start seeing pivots at a high peak or at a low trough. That's when you have to kind of dig down into some of the deeper tools. So inside day bar flagged this little reversal. Now we've got another inside day bar. Is it at the bottom of a pullback? Maybe. Do we know that for sure whether it is or not? No. But here's one other tip we can do. We can go to the drill down to the hourly or the 2-hour chart and see what's going on there. And that may give us a better picture of what the next leg should be. Here's a sequence of 2 ups, right? 2 up, 2 up, 2 up. I'm not sure if that's an up or not. Looks like possibly an inside day bar. Another 2 up, another 2 up, and another 2 up, right? So that is your sequence of 2 ups. And let's see, here's a 2 down. And that looks like an inside day bar. 2 down, right? And then we had an inside day bar, we had a 2 up, and then an outside day bar, and it was that sequence. Where's my little box? That sequence right there, right? It was a 2 down, 1, 2 up, 3. If you put those together, that's a reversal. Here's a 2 up, 1 inside day bar, 2 down. That is also a reversal. That's a 3-bar reversal. So now we're working on the potential of a 2, 1, 2, 2 down, 1, 2 up reversal down here on top of the 34 bands and the LRC. Don't know this for sure. Can't tell whether the next leg is going to be up or down without drilling down into some lower level chart. So let's see. That was the one day. Let's just stay on this big chart and put it onto the hourly chart. Get rid of all that stuff. Okay, now I just showed you that you've got the sequence of weak rallies that keep breaking down. Right, there's a little one right there. And we are now printing another rally, weak rally. All right, so how do we determine whether the next leg is going to be up or down? Well, we can look at the bars. These aren't real definitive, right? You've got a 2 down on that red bar, a 2 up on that green bar, and then today's bar, or the last hour, this is a 1-hour chart, looks like an inside day bar. So very, very, and now we're getting a new hour. Let's do the 2-hour chart on this and see if, no, I don't want to do that. Okay, so that's our sequence of, here's another sort of rally that failed as well. So we have a 2 up, 2 down, and another 2 up again. So again, not real definitive just yet. Let's wait until the closing bar. So we should get one more bar. We'll get one more hourly bar for sure at 3 o'clock until the close. And if that takes out the low of this current bar that we're in right now, then all bets are off, probably to the downside tomorrow. If we hold above this little line here and we hold above the low of that 2-hour bar right there, pretty good chance that we've seen the bottom of this pullback and we're going to bounce right back up again. Now the line to take out to the upside to confirm that we've got a good leg higher is that one right there. So let's put this on top of the intraday moves. There we go. Oh, that's pretty close. That's close enough. So as long as we stay underneath that RTL, the resistance trend line on the 2-hour chart, we can assume that the next leg is going to be to the downside. If it closes above that bar and that line, and it may, by the end of trading today, we still have an hour and a half, then the next leg should be to the upside. If we do get that, I'm likely to take our profits. We're in MAS short, we're in SQQQ long, and we're in FNGD. We have a couple of stock shorts as well. Everything's doing really well right now, but we don't let it get caught in a big gap up or a big updraft or a nice trend up day. It's the best market that brings joy to the trader is when the market's falling, but our profit is going up. That's kind of where we're at this week. The next best is when the market's going up and we are outperforming the market, right? We're not just performing with the market, we're outperforming the market. The worst market to trade is when the market's going up and our profit and loss is going down because we've got a whole bunch of shorts on. So we want to avoid that. I just would rather be in cash than experience that kind of pain. So that's where we're at. I think we can probably say that tomorrow may be a little bit more on the bullish side than it has been the last couple of days. But there's no proof of that yet. So let's just wait. Let's just wait on that and see where we're at the close. Okay, that was a little too long-winded. Also, I wanted to show you that if you click on indicators and if you type in STRAT, you're going to get a long list of indicators that have nothing to do with what I just explained to you. Somewhere in here, there is that 3-2-1, 1-2-3 function, and I don't know exactly what it's called. I just know it's here because the guy that invented it programmed in to TradingView, and it will show up it will give you the reversal pivots, right? So there's a 1-2-1, 2-1-2, 1-2-3, 3-2-1, and all kinds of other combinations. Some of these are stronger as reversal signals than others, but they're all worth put them on your chart, see if they work. The only problem with the word strat is that the word strategy also has the word strat, and all all of these indicators here are called strategy. So unfortunately, you're going to have to weed through a long list. Maybe that's it. Strat Assistant. Is that? Okay. Yeah, this is interesting. So this will give me the names of the bars, right? 2 red or 2 green. 3 is your outside day bar. 1 is your inside day bar. But what it is not showing here are the reversal pivots. I don't know, unless those arrows, maybe those arrows, right? Continuation down, continuation up, and then we don't have any arrows on these 2 bars because it hasn't completed yet. All right, I have no idea how to read this. You'd have to dig down. If you go to, if you click on the Strat Assistant and you go to, is it Settings? No, it's over here. About this script. Click on About this script, and you'll get a page that describes, right, how to read these, how to trade it, and so on. Anyway, that's your tip of the day. All right, I'm going to go back to my daily chart. Actually, let's move this aside over here. All right, let's take a quick look at QQQ. As usual, I'm being a little too long-winded. Or was that QQQ we were looking at? I don't know. No, there's your SPY. Here's QQQ. It's very much the similar kind of chart, just that we don't have as much strength here as we do in the SPY. The momentum is lower. The big Mag 7 at the top of the NASDAQ 100 some of them have been underperforming. Amazon, Microsoft, Qualcomm, etc. And that has led the QQQ to underperform the S&P, which was up at all-time highs just a few days ago. We're not there yet. So we've got the big 2 bar down. We've got the inside day bar same. We're above the 21 period moving average. That's all good. Big flush out yesterday, however, and let me say this is kind of a trading tip. When you get heavy volume near a top, that's not, I mean, when you get heavy bearish volume near a top, not a good thing, right? Not a good. And it often takes several days to kind of overcome that if the market's going to print a new leg higher. So even if we held our shorts today, unless we get something overnight that really the market loves, we probably would still be okay tomorrow. We probably would still be able to get out with some profits. But I have a feeling by the time we get to tomorrow's close, we're probably going to be mostly in cash. Right? Just let the market settle a little bit, and we'll do our research over the weekend and figure out our plan on Monday. All right, so same problem here. We don't really yet know whether the next leg is going to be up or down. Obviously all the trending is higher. Near term, however, it does look like, to me at least, we want to come back down here and test the midline of the LRC, maybe the 50-period moving average. I don't think it's going to get any further south than that, but that would be another 6-7 points in the QQQ. And why does the market have to fall back? Well, I did mention a number of them, but one of the things that should be of a concern to most traders are the bonds, right? The bonds have been finally, thankfully, we're getting a nice, good-looking 3-bar reversal. This is kind of an interesting one, right? So we had the 2-bar down Tuesday, followed by another 2-bar down, and then a 2-bar to the upside. So this is what is called a 2-2-2 reversal. 2 days down, 1 day up. That's a big up day. Today's a big up day for bonds. Okay, that's a little bit of hope here. And as we look at another indicator that I like, the supply demand pro, this is not a free indicator, and I'm not even sure if the guy who invented it is selling it, but it will show a modest box of price support at yesterday's low and magically tagged it and has reversed. That's a very good sign. It's a bullish sign for bonds. We want to see bonds go up. We want to see yields come down. Why? Because yields are related to interest rates, and interest rates are related to profits. When corporations can't make a good profit because they're paying out all this money on loans, and and it affects the retail trade as well, because if you can't get a cheap car loan, if you can't get a loan for your refrigerator with a decent rate, if your credit card rate is up above 25%, some of them are, all of that's related. Don't tell me how, but all of that's related. I'm not an economist. All that's related to the yield curve. So we want to see the yield curve start, not the curve, but we want to see yields come down and bonds go up. All right. Move. I wanted to show you move. So move is something that probably 99% of traders never look at, and something that I have only been looking at when bonds are at some kind of an extreme, because they can flag reversals. So move is it's like the VIX index for bonds, right? VIX, V-I-X, tracks the number of short-term, near-term puts that are being bought on the S&P 500, right? 1 month out. So near-term worry, when the VIX goes up, people are more and more worried about the market falling. They're buying protection. And the same is true with the move. The move goes up, people are buying protection on their option positions. So a high move, this is as high as it's been in a year. We have to go all the way back to December 2023 to find a move this high. That's an extreme print for fear in bonds, and that typically flags signals a reversal in the bond itself, not the yields. Well, the yields are reversal too. The yields are coming down, the bonds are going up. So move, and I like the fact that it's up here at the same level it was back in December, where it reversed very sharply. We had a nice long pullback in move and a rally in bonds. They topped out somewhere in June, I think, June or July, and it's been downhill ever since. So if we can get bonds to rally, then we'll be okay. Actually, it benefits me too, because I'm still long my shares of TMF. We had a series of put rights on it and covered calls, and then it just tanked, and we couldn't get enough premium in our calls to make it worth it. So let the calls expire worthless, and I'm still hanging on to my shares with some hope that maybe a couple of months from now I can get out of that at around even. We have a lot of profit in that position. It's just that over the weeks we kept taking in premium, but a lot of that has evaporated with my shares. So, all right, let me show you a handful of charts that may or may not be of interest to us. So 3 charts here on plays that are in the AI field, specifically in the data center construction or the data center infrastructure, the data center technology space or spaces, and all 3 quite strong, all 3 good growth names. I just wanted to see what the charts were looking like. Okay, so this one, VRT, this has been on and off the IBD top 50 list, even in the IBD top 10 for a while on the leaderboard. Hasn't been there for a while, not quite sure why, but this does look pretty good. Momentum is waning. We can see from the ROC, it's crossed over the 0 line, not so good. Probably need to let this cool off a little bit, but where is it going to go? Well, there is some minor support around 102.50. The LRC is closer to 97.90, and then the 50 period moving average is down there around 93. So one of those 3 would probably be the place to get on board. It's at 108 and change right now, so not really the best buy because of that waning momentum, but let's keep an eye on it. CLS is, boom, off to the races today on earnings. This is a hold in my hot stocks letter, and it is just doing really well. It's up about 160%, 170%, something like that, over the last year. Or is that year to date? And I'm not even sure that includes today's big pop of, what is it, 15%. It's up 15% today. So this is very good. My rule on earnings, this is a good example of learning this rule if you don't know it already. There's your earnings gap. So prior to earnings, the market was saying this is a $56 stock. It's fairly valued at that level. Earnings come out. They beat on the top line. They beat on the bottom line. They raised estimates. Analysts start raising price targets. All of a sudden, the market realizes, hey, this is worth a lot more than that. It's not a $56 stock. It's a $66 stock. Market shoots way up. So as long as that gap stays open, and as long as we kind of hang around current price, so even in the low 60s, I'm okay with that. Maybe even a little dip below 60. No, I'm sorry. We don't want to see this gap fill. I made a mistake. 62, 63. Maybe a pullback there is fine, but as long as it stays above that gap, the market is giving the thumbs up to this new valuation, and that then becomes the low that it will not violate. The only way it's going to violate that is if some material change happens in the company or in the economy. In the absence of one of those 2 things, this should stay high and likely continue higher. So keep an eye on that. I like that chart. It's a very good reaction to earnings. Always, always bullish to see that. APH, don't know this company at all, but this is another data center play. Also out with earnings the other day, had a little bit of a gap, so not quite as exciting. And we're seeing the downtrend. We're seeing some confusing price movements, right? Really way down, kind of a weak rally, down again, weak rally, down again. So it's not this is not a bad chart. It's just that it's not a real clearly defined trending chart. And that's not what we want. We don't want the chart like this. We want the other 2 that we saw. So keep an eye on VRT and CLS. A couple more here. ERJ. This is a Brazilian, what is it, a capital market play? Something in Brazil. Okay. Not quite sure why. Obviously, it's a nice uptrend. It did come all the way down to the pink zone, hit a volume shelf, bounced cleanly out of that. Earnings are coming up in a couple of weeks. This is a foreign play, so we have always, have to understand that the fundamentals on this may not be quite as clean or clear as it would be if it were an American company, not under the same scrutiny. But I like this. I don't say I'm wild about it, but I'll put it on the watch list. The CORZ is one that has been on my watch list for a while, and a number of the guys in my pro trader group are wild about it. It is a biotech play, and I don't do a whole lot with biotechs. I prefer to just trade LABU, L-A-B-U, or maybe calls on XBI, because it takes kind of a specialist knowledge to drill down into the individual company. You got to look at the pipeline. You've got to look at FDA approvals or disapprovals. You've got to know when the catalysts are coming up, because those can be binary events. And what was the last phase 2 trial, phase 3? You got to know all that stuff to safely play these. You can't just trade the chart, because the chart can totally flip around in a day. So that's why I prefer just diversifying and going with the whole sector. But for whatever reason, some guys in my pro group really like this. They've been building positions, and I think it did also have some good call flow last week. So keep an eye on that one. Here's LABU, just to get a good look at it. Modest uptrend, nothing too exciting. We are using this chart to sell put premium week after week. We're probably going to get put shares tomorrow. In that case, then we'll sell some call premium. And we've been doing this back and forth, week after week. We're in our, third month or something doing LABU now. I had it as an unofficial trade for a while, and then shared it with the group, the live trading room. And anyway, all good. Should be getting a nice little bounce off that support trend line from the volume shelf in the pink zone. What was the other one? HUMA is another biotech play. Yeah, I don't really see it in the chart. This had a big slam on something with the FDC. That's usually a scary prospect, right? It went from it was up here at 630 and went all the way down to 445. So if you're long, then you held on to your shares, more power to you, because it's totally reversed that and is right back up to almost 6 again. The guy that is pumping this, I shouldn't say pumping it, but he's been talking about it for a while. He got into it because a senator or congressman who sits on a board that should know about this kind of thing has been buying shares. So if you want to mimic some insider trading coming right out of Washington, D.C., you can go ahead and buy shares of HUMA. Not my kind of trade, but just wanted to share that with you all. All right. ERJ is a Brazilian aerospace. Oh, yeah, defense. That's right. Defense and aerospace play. Thank you. All right, so it's time for chart requests. So why don't you go ahead and type in. Go ahead and CORZ is not. Oh, I'm sorry. That's right. Bitcoin mining. Bitcoin mining. CORZ. Yeah, thank you. So we bought some Bitcoin today. ARKB. And it's this line, resistance trend line, which we're just waiting for this. This is the, we'll count that once, I guess, twice, 3, 4 times. 4 times it's been up here in the neighborhood and has gotten pushed back each time. And as I like to say, the more times you knock on the door, the more likely it is to open. And there are some good tailwinds for Bitcoin heading into the post-election season. So I wanted to get on board with a tranche. We're there already now this morning, and we'll just see where it goes. All right, let's take a look. XBI. Well, it's going to be very similar to LABU, a little more robust. LABU has some speculative names in it. XBI has more of the more established names, companies that are actually making money. And but it's really the same chart. So you had the deep cut low a couple of weeks ago. bounce back up to the midline of the LRC, and it is an uptrending LRC. That's always good. Back down to the pink zone, pretty much with the market, and bouncing back up a bit today. It's a weak bounce, but it's getting there. Distribution, however, on the volume side, not looking so good. So it was a lot of distribution up here at this high and pretty much all the way down. A lot of selling pressure. A little bit of a weak bounce, although there was some accumulation, a couple of accumulation days in there. And then another rollover on some distribution again. So, yeah, I'm not quite sure what that tells us, other than the market in general is a bit skittish about the risk on plays, this being one of them. And, you know, every time we get a higher inflation read, CPI, PPI, that puts pressure on the Fed to stop cutting rates, to go back on pause, and that puts pressure on biotech stocks and small caps too, for that matter. So until that changes, you're probably going to see this kind of up and down for biotech. But I do think that, you know, it's given the potential for deregulation, lower taxes, and falling yields because they've been so high, they've been in such rally mode. I do think over the next few weeks we should see a better macro for biotech. That's my game plan. Let's see, Ryan. Nice pullback chart. So memorize this pattern. Don't worry about ROC down here. I really should have on the stochastics indicator. Yeah, well, let's go over here. No, let's not. I don't want to mess with that. Too much work. Okay, so uptrending LRC, stacked MAs, 21 above the 50, 50 above the 200. They're all pretty much rising. You've got a test of the blue zone back into nearly the pink zone. Big bullish day yesterday on a weak market day. Boy, mark that. Mark that. Not that it's definitive and the price is just going to skyrocket from here, but when you get upside on a weak market day, that's a very good sign of health in the stock, in the company. Now, sometimes I have to say, sometimes the market goes down, right? It goes down on for economic reasons. It's pricing in something, and you've got a stock that keeps going up. You think, man, I'm in the greatest leader company of all time. But then those economic conditions change, you get some new data points, the market starts going back up, but then your stock collapses because the very thing that caused the market to go down was propelling your stock to go higher. And when those conditions change, your stock drops. So you have to be a little careful, right, with just trading that one data point. But it is a good one. It's a good one. I like this chart. I like the pullback. It is maybe a little bit more on the sharper side than you would want to see, but it's not that bad. Bouncing cleanly, everything is good. This is just good. Technically speaking, very, very good. Also, I know Ryan is in and out of the IBD top 50. I think it's still in there now. So it's got some good growth numbers, sales numbers. So Tesla, boom. I have my options letter members in option calls of TSLL. They're up something like 200% today, maybe more, because this looks like it's higher than it was last time I checked. So there are ways of making money, and I personally never buy calls or puts over earnings. And but we were in the Tesla calls from about 6 weeks ago, and to be honest, I totally forgot that earnings were coming up, and I totally forgot we were still in that one. Kind of got lucky, but in any case. Big boom on Tesla. So 250 is going to be the line in the sand on the floor side of things. 262, 263 depends on where you put your bar. It's going to be a ceiling on the top side. Like any earnings, you've got the big gap. You don't want to see that gap close, so it can get down below 250. You don't have to panic, but if it gets below 245. You probably want to think about scaling out, because if the market says, no, Tesla is not a $260 stock, who knows how far it will drop. So you don't want to see it get into that gap, if it does get into the gap and you're not in the position and it bounces back up again to the upside, and if it doesn't get maybe it gets down to like 240, bounces back up, then you can get in. But if you're already long and you're watching it get down below 240, yeah, you want to get out. So it's probably going to get stuck at 262, 263. But this is very good momentum, and it's on the right thing, right? Big growth numbers, big future projection numbers, lots of positive bullish sentiment. And this is a much hated stock. So you've got a lot of shorts in there that have to cover. Now, short squeeze, keep in mind, doesn't last very long, maybe a couple of days. So maybe we get a little more upside tomorrow, but I do think it's probably going to cool off for a little while, right? Last time it got up here, it cooled off and then it fell. The next time it got up here, it cooled off and then it fell. I don't think it's going to fall, but it will probably cool off for a little while. Just to curb your expectation, the big move has already been made. PLTR, this is a good looking chart. I was looking at this one actually earlier today. It is a, I'm seeing the indexes on the 5-minute chart have just gone totally quiet. Yeah, this flat, flat, flat. This is a good looking chart, right? You've got everything rising. It does tend to, it likes to consolidate inside these wedges or pennants or flags, whatever you want to call them, and then boom to the upside. Consolidate, boom, consolidate, boom is the next move. We may be long. However, I don't think I would buy PLTR over earnings. Last time was up strong on earnings, but that was after a big sell-off. No, I'm sorry, I take it back. It sold way off on earnings and rallied all day long and then was up from there. There's a small up on earnings. No, where is it here? That's kind of interesting. So I think that's your earnings day right there. It was way up into earnings, and then all the numbers came out, and it was boom, right back down. And here's another earnings that was a positive pop. So it's a binary event. If you want to flip a coin, I would, the problem with buying calls is that the premium is going to be jacked up so high, you really have to get a big move to make money. I would rather, if you really want to take the risk, buy some shares and take your chances. But this is a bullish chart. It looks very good. Even as a little swing trade into earnings, this could be up 10, 15% by the time it gets to earnings. Now is good also on earnings. Didn't hold the highs. That's not a good sign, but it is above the gap, and it's not a red bar. So as long as it stays above, 940, we can say that this new valuation of the company is holding. It's good. I don't know if I would play now. I think I would go with CRM because with now, the news is already out there, and it's going to need something else to kind of keep it going forward. CRM, seeing now produce such a great quarter, and its earnings are a good month away, month and a half, it's got a lot to look forward to, right? So it's got something more of a tailwind pushing it forward. I like CRM a little bit better. NNE is we were in this one a little while ago. It was it's a nuclear play, nuclear energy. Let's get rid of some of this stuff. So this is more of a, I don't want to call it a meme stock, but it is the kind of stock that gets some irrational movement, smaller float. I don't know what the short is, what the short float is, but it's the kind of stock that will not necessarily move with the market. It trades to its own beat of the drum. But these are big moves, and they can be really scary if you're on the wrong side. So this is why you don't chase big green sticks, right? Big green stick, don't buy it up here. You're going to get stuck the next day. Big green stick, don't buy it up here. You're going to get trapped the next day. Big green stick, boom. Big green stick, boom. So don't buy big green sticks. Buy the pullback, and this is actually not a bad one. We're back to the 21 period moving average. It's rising. The MAs are stacked. The LRC is just, well, I don't know if the MAs are stacked. Oh, it doesn't have a 200 yet. This is an IPO. The LRC is just barely rising, and I don't see any reason why it shouldn't hold. You've got very good volume today. You had good volume on the way up, right? When it was up around 28, and now it's down to 18. This is a wild ride, folks. We do these. I just like to go really small on a trade like this. So a lot of size only. You would put your stop pretty tight, right? Maybe 1690 or so, and let it go. And if you get stopped out there, wait until you get another good green candle like this one with good volume, and try it again. Let's go. Well, TGTX was removed from IBD. Do we continue to hold? Well, we're just trading the chart. And frankly, I didn't even know it was in the IBD 550. I knew it was on the leaderboard not too long ago, and it was on the leaderboard watch list not too long ago. Yeah, did we not get stopped out of this? No, we didn't. We were at 2250. What's the low today? No, we're not stopped out yet. Okay. So everything is still okay. The reason why we liked it yesterday is still the same reason we liked it today. Everything's uptrending. Tag of the pink zone, a little bit of a hold there. Yeah, there are some problems with the chart. It's not a perfect chart. But we've got a fairly tight stop on it, and we've had really good banking this week. So we've got a good cushion of cash on hand, and it's just a quarter size position. So I'm inclined just to leave it with the stop, and we'll see where it goes from there. TTD, this is a one of my favorite stocks in the ad tech space. There really aren't too many stocks in that space anyway, but this one, similar to PLTR, is a stock that likes to bump up higher and then consolidate. Bump up higher, discount, pull back, consolidate, and then run higher. So it's in a nice uptrend, stacked MAs, LRC is rising, volume balance, not horrible, and we're just doing a little sideways churn. So very similar to PLTR. This one has a little more time to earnings. This could be up, I don't know, 128 or so by the time it rolls out to earnings. Another 10 points from here would be a good run, but it is capable of doing that pretty quickly. Yeah, that's bullish. That's a bullish chart. It's a good hold, and I wouldn't kick anybody in the pants for buying shares today. SBRA, okay, a healthcare REIT, so you're probably going to get a big dividend. It looks like it only pays out quarterly, so keep that in mind. I like the pullback here, really like the uptrend, stacked MAs, very good volume balance down here. That's excellent. Nice little pullback to the pink zone, volume shelf, rally back up. So it's going to get stuck up there into a former high pivot right around 1920 or so, and may not be able to get back up above that. We've got earnings coming up in a few days. So this kind of chart, I would say take your profits if you're already long. If you're not already long, wait. Wait until after earnings. You might get a nice dip down. NRG, green on a red day. Yep. Yeah, this is a good chart too. This is a good modest uptrend, right? You want to see an uptrend that doesn't exceed 45-degree angle. And, of course, you can make any chart look sharper than 45 by just scrunching it up. Make it less than 45 by flattening it out. But in general, a line from corner to corner is going to be your 45-degree angle, and you want it to be at that or a little bit less. When you get uptrends that are stronger than 45 degrees, they tend to be more susceptible to sharp pullbacks. But this one looks good, and I like the fact that it is an A, B, C pullback to the 50-period moving average. Big up day yesterday on a red market day, and follow through today. This looks very good, actually. In fact, I really like this, and I wish earnings weren't that close, but you know what? I'm going to write this one down. Add it to my NRG. Add it to my, this is in the same space as CEG, I think, right? A utility play that is benefiting from all the extra energy needed for AI, something like that. Let me do a couple more here. ASPI. Wow. Okay. Well, smaller cap stock, skyrocket mode. If you're long, hold it. Move your stop under the low of each new bar. If you are thinking about buying, I wouldn't. It's a very low probability setup right there. You're in a volume shelf. You've got this crazy momentum. You've got lots of volume, which is a good thing, but when it's in momentum mode with heavy volume, you are much closer to reaching that equilibrium point where there's nobody left to buy anymore. It sounds counterintuitive, but you almost want soft volume on the way up, kind of like a quiet run. Nobody's really that excited about it yet. And then people start piling in. And when they start piling in, that's your time to start thinking about getting out. So people who have been long this one from like 250 are likely selling out today, if not in the next couple of days. And then there's nobody left to buy, and the market can only go down. So just be wary of that. But man, that's a nice pop. If you bought it underneath the 200, congratulations. That's a good one. Let me do two more here. FI, really good company. Yeah, it's a nice looking chart. Fiserv, I know this company well. It used to be, I managed a hedge fund for a while, and they did all of our accounting and bookkeeping and stuff. And yeah, it's great. It is a great company. I know they're very, very good. Now they did some changing. I mean, we had to actually not fire them, but we had to change or swap out. And it was right around 2008 when the market was crashing. It was just really kind of a mess, and they weren't all that helpful. But that was a long time ago. I'm sure they're much better now. Yeah. So this is a big, that big type 3 outside day bar candle on earnings. Follow through yesterday on a bad day, and more follow through today. It's a hold, it's not a buy, but nice looking run, strong chart. All right, so Clean Spark. Yeah, we have been in this one before, I think. So nice big pop. There are several companies like this that have been laggards. They've been beaten down. And then within the last few weeks, like Upstart and Unity and Snow hasn't quite gotten on board yet, I don't think. They did have a little moment, and then it kind of petered out. This is in that same group, right? And, okay, what's it going to take to declare the end of this downtrend? And it's a sharp downtrend. So it did try the breakout and failed. We've got the bullish cross. We've got good volume coming in on the way up. We also have some big volume on the way down. I would say to really declare an end to this, you're going to need to see a close above 1286. Let's just make it 13. And yeah, although it doesn't quite qualify, but I do have this you know, the little pattern that I like to talk about. In a downtrend, you get a sequence of lower highs, lower lows, and then you get a higher low than the previous one that takes out the most recent pivot high. I think you could say that this pattern right here is that, and then in that case, we can declare the downtrend has come to an end. Is it in an uptrend? Not yet. Not until we get above 13. But that's got some promise, I have to say. Just technically speaking, it's got some promise. All right, guys, I am going to Bitcoin miner. Why do I keep missing the Bitcoin miners? I just think Mara and Riot and Hut. Those are the three that I know. I know we've traded this one before, though. Guys, have a great rest of the afternoon. We've got 50 minutes left of trading. I'm going to produce the video, send it over to the YouTube channel, and then get back and see if we can add on something else before we close. Bye for now.